I was trying to like follow it in the footnotes. I just didn't know they bought the.
I called the Audit and Finance Committee meeting to order. Enough people, right? We're good. Is anyone online? Okay. Let's make a motion to accept the minutes if everyone read them
So
from
moved.
January 25th. In a second.
Second.
All in favor?
Aye.
Anyone opposed? All right. Next, the 2022 audit and related correspondence. Just going to go through that, just that we read it, or
Lisa,
we need to approve that? Yeah.
to relate it.
So you're gonna have.
So we're going to have a presentation
Okay.
from Matt Vanderbeck and Nicole Overbaugh from UHY LLC. P. As opposed to UHY Advisors LLC. No, but and as you know, the UHY acquired the Koski firm 3 years ago.
3 years ago.
And, you know, we, Matt and Nicole have been working on our account. I suspect by next year we'll have a rotation of some sort. But again, when we got the additional federal monies, we ended up having to do the single audit, which was an additional expense and effort. And they'll explain that again to us. But I think last year was our first year doing that. And part of the issue we have now is not only are we getting more money from the SBA for Martha's program, working with Steve on loans, but the county money that we're receiving for housing and for broadband and for Columbia Forward that's coming through ARPA monies gets, it's really federal money allocated by the county. So we're going to be in a single audit business for a while.
Yes, that's right.
It's showtime and
Okay,
take
great.
it away.
Thanks, Mike. So, yeah, I'm going to go through the financial statements first. So if you have those, and then Nicole's going to talk about the single audit, which is what Mike is referring to on the federal money. There's a separate report for that, as well as our communications that we want to provide to you guys. So starting with the financial statements, I'll refer to the report. Of course, the first page doesn't have a page number because it's page 1. If you go to the first page with the independent auditors report, just want to point out to you this year, one of the things you'll notice in the financial statements on the balance sheet and the statement of financial position is that you implemented GASB 87, which is the accounting for leases. So the lease arrangement that you have with this location here has basically in the past been a commitment that's disclosed in the financial statements. With this standard, it takes the commitment that you have with the lease and basically put that on the books as a liability, and then there's a corresponding right of use asset. So when you look in this year, you're going to see those stand out. So that's something that's disclosed in the report. And then on page 3 of the report, we refer to a government auditing standards report, which is included here. But Nicole will talk more about that when she goes through the single audit, because you're applying government auditing, government accounting rules, and because you're filing these financial statements and the Paris reporting, you have to follow. We have to follow the additional government auditing standards. So we have to report whether or not we have any compliance issues or control related findings to you as well. So I'll leave that for Nicole to go through. Otherwise, the report is unmodified. So then from an overall perspective of the organization for 2022 compared to 2021, I'm going to start on page 9, which is the statement of revenues, expenses, and changes in that position. The page number different. Oh, you're looking at the single audit report.
Page 9 of the, towards the back. Page 9 of the audit, not page 9 of the
Same
packet.
together, I guess. Yep, okay. So yeah, make sure you're looking at the statement of revenues and expenses. So overall for the organization for the year, you had down the 3rd row from the bottom, you'll see a change in that position of negative 17K. So about break even, 17K was the loss, where the year before you had a positive 35,000. So overall, in managing the organization, really you've matched your revenues and expenses fairly well. So that's why you're kind of ending up where you ended up last year. So when you look at the revenue, you'll see it went up significantly from 372,000 to 666,000. A big component of that is that you did receive this grant revenue from Columbia County, which you see identified there. There is a footnote on page 23 that describes everything, but for the most part, it's $107,000 for the Columbia Forward. You had 38,000 broadband money, and then there's a description in the footnotes about a property that was purchased, which again we'll see in the balance statement of financial position in a minute. So the county funded the purchase of that property, which is referred to as Lot 8. They provided $88,000 in current year grant funds to support the purchase of that. So when you add those up, that's what's the 247,000. Most of the other grant revenue that you see there is SBA technical assistance work that the organization does, so that is consistent with the year before. You also did apply for an employee retention credit of about $40,000, which has been also approved as a receivable and recorded as grant revenue. The expenses, when you look at the grants, the number popped up, it's larger than what you would expect typically to see. You had this arrangement. We had funding from CDBG for a loan to Flanders in the past. This year, they met the requirements to recognize and not have to pay back the loan. As a result, it shows up as a grant. So it flipped from a receivable to an expense, and that's why you see that big jump there in that number. Overall personnel and benefits, which is your biggest line, was just nominally up 7% year over year, so that's pretty consistent. And you can see that where last year you had the benefit of the PPP forgiveness as income. Last year in 2021 was 132,000. This year you had a bump up in the county appropriation to 460,000 to help support the operating loss that you see on this page. So then if you flip to page 8, which is the balance sheet, backwards. So now when you look at the balance sheet, things that should stand out, first of all, at the bottom of the page is net position. So you have a decrease in your net position of about 18,000, which is the loss we talked about. There was some shifting of the restricted funds. So some of the restricted money from the past that you see in 2021 column for Commerce Park County directed, the county decided to apply those funds to allow you to purchase that property, that Lot 8. So that's why that flipped. The purchase of the property was $232,000. So at the end of the year, that's sitting in your balance sheet because it had not yet been sold to whatever the future plan is for that piece of property. So it's sitting in your balance sheet. And then it's also considered restricted because that you really need to spend or to transact that how the county really wants you to do that going forward. Your cash position has improved. It's at 1.4 million compared to 1.35 million the year before at the top of the page. You had additional $400,000 that you had another tranche of your SBA money that came through. So you continue to grow the SBA fund as you continue to loan out money. This year, when you look at your loans, your loans exceeded your repayments by like $320,000. So that shows outflow of money and new loans, which impact the balance sheet. And also your restricted cash goes up because you have more SBA money that you have to use to spend. The right of use asset is what I referred to before as far as the lease, and then you have a lease liability that's in the non-current liability section. And then the SBA borrowings are reflected here as well. You had new CDBG money for the clock estate, $150,000 during the year. That's a similar situation as Flanders, so it's considered deferred until the contingencies are met. You didn't lend that money out, so that got added to your loans, but it's reported as a deferred revenue. So then if you really look at page 10 and page 11, that just shows everything I just described pretty much in the cash flow statement. So the things that we're talking about are all reflected here. mean, this, I would always point you to these two statements because they tell you a lot from a cash flow perspective. And you can see on page 11, your overall cash went up $285,000. I just want to point out a couple of footnotes. I mean, hot topic of the day, page 17, is just uninsured cash in bank. So just something to, I know Mike is, I think we've had conversations about this, and you've taken a number of actions over the years to try to protect the cash. So you've done that. This is just again raises the, for me not to say anything about this today probably would not be appropriate. So if you're going to bring it up to you, and make sure that you're thinking about where you have that excess cash. So 1.3 million at the end of 2022. The page 18, risks and uncertainties. We just continue to have a footnote indicating that the PPP money that you earned last year is still subject to potential audit, whether it be audited or not. Being at only the amount that you have is probably unlikely, but we have to disclose that it's subject to that review over a 6-year period. Change in accounting principle talks about the lease accounting standard. Page 19 gives you a good roll forward of your loans. So you can see the new loans, your payments, and then it's not a write-off. That was a $200,000 Flanders being reflected. So that's why it's presented that way. And you can see the overall loan activity. I will say, I'm not going to spend much time talking about your reserve today. Typically I would if I felt I needed to, but your reserve I think is reasonable because we have a lot of issues related to it. But at the same time, I'd say it's healthy. So you have a good process of monitoring that and establishing a reserve for your loans. So we don't really have anything more to talk about there. And then page 19 to page 20 is all the new. Actually, oh, I just see that. Gotta make it work. The bottom of 19 is the right of use asset. Page 20 talks about your restricted net position. So that's where you end up at the end of 2022 as far as funds that are in your net position that are restricted. And it describes why they're restricted. Page 22 describes the Commerce Park. There's a whole footnote with the history of the Commerce Park lands, and we've added an additional paragraph to talk about the Lot E transaction this year. And page 12 has been, or not page 12, note 12 on page 22 and 23 goes through the description of what's going on with the county as far as the funds that they've provided and the transactions that are considered related party transactions during 2022. And then at the bottom of page 23 is the new footnote, the lease liability that continues into the next page, and then we end up with the employee retention credit. So what I was just pointing out to you, there are some new additions. If you were to compare this financial statements to last year, you do have a handful of new notes and things that are added. So hopefully one day we'll make these things shrink. We're trying, but they seem to get bigger and bigger. So before I hand it over to Nicole, are there any questions on just the financial statements themselves?
No.
Okay, good. Well, thank you. So Nicole will pick up from there.
So as Mike mentioned, we also did a single audit this year. This is the second year that we've done a single audit in recent history. So I think you have to go back in your packet to the single audit, but we did a single audit for the year ended December 31st, 2022. We didn't have any compliance findings in relation to the major program that we audited, which was the SBA micro loan program. So no compliance issues, which is our report on page 1, 2, and 3. And we also issued a yellow book report, which is our report on internal control over financial reporting, which is page 4 and 5 of that packet. We did have a significant deficiency, which is on the last page of that package, page 10. I'm sorry, page 9. And the significant deficiency just relates to the number of adjustments that we had during the audit. So when I get to the next the letter that I'm gonna go through next, you'll see the list of adjustments that we had. And we just felt, given the volume of adjustments that we had this year, not all of them being necessarily significant, but the volume, that we felt we needed a significant deficiency in our report. So management does a good job of working with us to address a lot of the adjustments, but at the end of the day, it's just the volume that is concerning.
Yeah, our concern really is just like the organization continues to try to, diligently trying to find the right solution, right? To have the right expertise and the right resources. With everything that goes on, I can tell you there's a very good communication. So we know about all these transactions as they happen, pretty much. There's very ongoing communication. Mike and the team are very proactive. The challenge is taking all that information and getting it recorded and put into the books while we think there's a lot here. So there just becomes some situations where, we really feel that continued focus on trying to get the right expertise. So maybe just an additional look at the information to make sure nothing's missed. Because Mike can describe everything. It's just a matter of making sure it's all reflected properly. And so we had some adjustments that we need to work
And just
through.
to go through the adjustments, adjustment 1 related to the employee retention credit. UHY assisted us in mid-year to submit for the employee retention credit for $40,000, which we recently received. We didn't book that as a receivable when it was submitted. The second journal
It's
entry.
unusual. Yeah, it's an unusual.
Yeah, there's never been an employee retention
Right.
credit before.
It's a new thing.
Yeah,
It's a
and in fact, for the first, Kyle should have told us we needed to book it, but that's
Right,
another
and we
story.
did consider that a client adjustment, I believe. It's just
Well, I'm just
the
going through
timing
all.
of when we get the trial balance versus when we. post them.
I think they're all understandable. I don't disagree that we need to make sure that we minimize them going forward, but just to give you a sense of what they were. The land deposit for the whole movement of purchasing the land, clearing up the restricted accounts. Again, we were waiting for direction, but because of the single audit, UHY can't give us that direction. And we had initially worked with CFO for Hire in Albany on BST. Now we're working with a smaller firm in Rhinebeck called Zulch, ZULCH. And they're giving us much more quicker response. The second one that was actually to book miscellaneous expense by $5,900 of adjusting for increased capital equipment. Then 3 and 4 related to the land transactions. 5 was we didn't adjust the accrual for pension, the retirement account. When we paid it out, there was a receivable. We paid it out, and so it was expensed twice, basically. 6, with our loan funds, there's an issue we have with Down Home that we're working on, where Down Home is the software for the loan fund. 6 jumps to 8 instead of 7. And that was our unrestricted net position, a $136 expense. And number 9 was a payroll tax liability for Medicare that needed to be booked. And number 10, consulting fee of $500 that didn't get into the right category. And then the grant expense from Flanders, which was a year-end event anyway. And there was discussion going on with UHY as to how that was going to be handled. So we didn't make it until we heard from them. And then the final was, again, some equipment, depreciation expense, again, things you would do at the end of the year. And then one of the things we've always struggled with is membership you know, are you a member for a year or are you a member for 12 months from the date you join? And we have generally waited till the end of the year to do the calculation as to what's deferred income and what, you know, so if you join, it's about $18,000 of money that will get booked this year, not even though the cash came in last year because we do 1/12. And then this whole thing with the lease, we wouldn't have known how to do that until they calculated the new requirement of booking the lease. And then an adjustment on technical assistance and then sorting out all the money we got from the county. I'm not suggesting that we should have 12 or 13 adjustments, but I would say half of them, you know, the ERC, the land deal, the issues with respect to adding the lease are all things that, you know, are not necessarily in the scope of the work that we do on a regular basis. And I'm glad you pointed them out, but I do think we need to keep it in the context of, and this is where we failed last time, which is why they're bringing it up again. Failure to book something in a timely manner because we didn't know how to book it. And so now having this third party, I think that, you know, would be able to do it. And in half of the cases, as I mentioned, they were one-offs that had never occurred before.
Yeah.
So we just need to, and it wasn't like we didn't book it somewhere.
Yeah, I just want to point out, every one of the, other than little things that come up, right, you know, all the significant transactions, all the things that you're, the ERC, all the things, we communicate and we do provide you guidance. We can provide you guidance. What we can't do is, we prefer not to have to make all the entries during the audit because number one, it takes us more time and I'm going to have to charge you more money. Number one, that's 13. Every one of those has to be reflected in the work papers. It's a significant deal that you may not see, but it happens, okay, behind the scenes. So we are full, I'm not expecting to catch anything that Mike and I haven't talked about, and we haven't.
Well, and I think the other point is, there's nothing that was not booked. It was just not booked where it needed to be booked for.
That level, if you have that accountant just take a review and make sure they go through the list of all ways to check them. That's all we're asking.
We're gonna do it monthly, and you know, and they will help Kat and I go through this monthly to be sure that you will pick up the random thing that gets in the wrong category, you know, like the $136. And if we have a question, we'll bring it to you to determine whether it's something that you can help us with or not. And then and some of the issues do relate to double entry bookkeeping.
So you want to catch it, can I ask a question? You want to catch it so it's not after the fact, catching it, is all you're saying,
Yeah.
really? You want to catch it in real time, so
Yes.
it's not coming up at the end of the year audit.
Right, and like Matt said, I mean, Mike does a great job of communicating anything he has questions on, and we go through all these transactions, so it's not like we didn't find anything like that this year that we caught that he didn't bring forward.
We just want you to clean it up and get the entries booked, and this is how we formally communicate that.
And we understand that and accept that, and we get better every time.
Couple questions.
Yeah.
So you mentioned it came up before in the audit that they're unrecorded transactions, and just to level set for a
They were
second.
recorded.
This happens all the time, right? Every audit you do, there's some level of adjustment in unrecorded transactions that then get recorded. What's the difference with the new firm versus the old firm? Because
We didn't have the old firm last,
EST for hire.
we didn't have them last, we started them when this issue came up last year.
Okay.
And what happened
Well,
last,
year was not a finding.
yeah,
Last year,
Yeah.
Last year was-
it was a
It
fine.
was a fine.
it was a similar finding. Okay.
We had received a payment from New York State, which we booked as a grant, but it was really a loan.
So what happened?
And
was
so
they
when we
didn't-
booked it
If
as,
you look at page 10 of the single audit report, we have our prior year finding, so that's last year's finding.
we received,
It's just worded differently,
Yeah.
because like this year
Right.
says there were a significant number of transactions that were
That was
unrecorded.
one
that
material,
was
one
one.
significant transaction.
and what it was we received there's a program, we call it a grant program, because ultimately, if the person stays in business for 5 years, we forget the loan. But it was really a loan. And we booked it as a grant. It wasn't like we brought $40,000 in and didn't record it somewhere. It was just recorded as a grant. and it should have been as a loan. And then at the end of the 5th year, you would go in and watch.
$45,000 one?
Yeah.
Yeah, so it's the other CDBG number from last year.
What happened this time was, there are times when we've had issues trying to relate to, double entry account.
Yep.
And that's what this firm's going to help us with, and we're going to do it on a monthly basis.
Yeah, so in this, so just to give you, again, how this happens is like that goes in and out. So there's like no, like, it may not even show up necessarily because it's in and out.
Yep.
So that's what happened in that situation.
Well, and when I was trying to get this to where it wasn't -17, I wanted it, +1. Not that I'm competitive, but I noticed, well, wait a minute, we expensed in 2023 the actual payments to the employees who were part of the retirement system. But we had accrued for it all last year. So, there was an example where we didn't record the payment in 2023, but book it against the accrual last year and wipe the accrual out.
So what won't change going forward is the conversation and transparency and accounting support as needed when things pop up. What will change is more monthly scrubbing, more monthly attention to these more unique transactions as they come up.
In essence, we'll have someone close the books.
Yeah.
Yeah.
And it's an extra eye.
Yep.
And, on the issue of the fact that, as the board chair of a small mutual savings bank, we're going to have this conversation on Thursday about, are we going to lose all of our depositors over $250,000? We think we can lose, if it happened, you'd lose 28% of your deposit base. We were banking with Key Bank, Bank of Greene County, Community Bank, and with $2 million in the bank divided by three banks, we are double or more over the 250 limit. There was a provision that allowed not-for-profits to seek opportunities where they spread it. They put it, but we haven't been able to get any bank after extensive discussions all the way through their senior cash management people who know how to do that. Now, do we open up a $250,000 account at Berkshire and a $250,000? Do we have 7 banks so that we spread this risk? There are a lot of businesses that are going to banks that they feel are too big to fail. And, do we put it all at Chase and not do local? So we are looking at that, but one of the issues is when you look at the number of bank accounts that we have, it's because the SBA requires us to keep 35,000 here, but when look at the 250 limit, it's an aggregate. I mean, we can go to a model, where we get down, add 3 banks and get to 250. At the same time, the fact that the government said they would guarantee all the deposits in the 3 banks that are in trouble, they can't guarantee. There's one, I looked it up, there was $37 trillion of unsecured deposits in the system on Friday. They had to be able to guarantee all of those. They made a big mistake saying they were going to guarantee the full deposits. But so I think it's something, certainly you're going through this, I'm sure, in any larger business. But what worries me is if you think of what kind of an issue it is for $1 million operation that has $2 million in the bank, what's General Motors going to do? I mean, and that's where I think the risk of the collapse of the banking system exists. Is that, no one knows how that's going to work. Any feedback from our small business owners and our large corporate?
I think everybody's looking at it.
Yeah, totally.
Everybody's looking at it. That's what I would say. And the banks are lining up to tell you how safe they are.
Yeah.
Yeah.
And it is hard to trust I mean, I use a bank that I can't do a virtual transfer from another country unless I'm in person, which always rubs me like, it just causes like an underlying fear. for
Well, like,
me.
yeah,
You know what I'm saying? Like, it just makes me feel like, if you can't do that, what's gonna happen, in a catastrophe?
well, look, just having to go to the bank to open
I
a
want to
CD.
support local banks.
Right.
Just, you had to go to the bank to sign a CD. Any other bank would have you do that electronically.
It's a risk tolerance, and it's their Bank Secrecy Act too.
And-
So
And I think that,
that's what.
And the rates for the CDs are way up now.
Oh,
well,
yeah.
we did a $400,000
Yeah, they're
CD
crazy, yeah.
with
The ramp
Community
up.
Bank before this all happened. And, we're gonna go from zero or what, $2,000 or $3,000 in interest income to $15,000. Because we also got all the other banks to give our operating accounts 2%. And Community Bank on our operating account where we have the county loan fund gave us 3% on the operating account. So, but yeah, the electronic thing, my daughter and son-in-law drew down on their line of credit for their renovations of their home on Sunday night from First Republic. They figured it'd be better for them to have the money in another bank than to wait and see what happens to First Republic on Monday morning. But if you had to go and sign papers to do that,
What's the largest amount we have in one bank?
well, we have it pretty well spread. It's about 600,000 in 3 banks.
Okay.
I mean, we're trying to be ecumenical so that when, we ask for the $2,500 membership, you're a customer. So,
Okay, so we have anything else that I think we covered most of?
Yeah, I think just going back to the letter, I mean, we've already talked about most of it. Page 2 of the required communication letter, we're required to just communicate our significant risks that we identify at the beginning of the audit and then the conclusion of the audit. So at the beginning of the audit, we communicate these two via the engagement letter. So revenue recognition and management oversight and GASB 87 implementation with the risks we identified, but we didn't have any control deficiencies or any issues related to those risks. And then we've already talked about the adjustments on page 3. Page 4 at the bottom of the page. We had some IT recommendations, so we're required to ask management to fill out an IT questionnaire every 4 years, and this was the 4th year that they were required to relook at that and fill it out for us. So they fill out that questionnaire, and then our IT auditor reviews it and provides recommendations. So those 4 items that we list in this letter are just the recommendations that the IT auditor provided. I just felt they were important enough to bring to the attention of this committee and management and the consideration of how you may be able to address those in the future.
we sent these to we use a third-party IT company, TechBridge out of Albany. The biggest issue for any small business is the segregation of duty issue. Our third-party service provider to provide regular reports on network activity and security for management. They send us something once a month, but it's like a clean report. But I guess that's what you would want them to send you. Vendor management, we're in touch with them regularly because people need help desk type things. And then the network security. One thing we are looking at is they want $24,000 for a new server. Half of that is $200 an hour for 50 hours to migrate us to the new server. And so we're beginning to review, and Steve is helping me with this, whether you go to the cloud. And that would be something we ask this committee for some guidance on. You'd still have the cost of moving over, but to buy the hardware, when I looked the hardware up that they proposed in their proposal, they're marking it up marginally from what you could get on Amazon, but that's because they're picking it up and bringing it here and putting it together. But the real thing was the hours, and I said, I guess if you lock into the deal at that price, we have to do an RFP if we're going to go that route.
Yeah, the other piece I think was there a cyber comment too, which
Yeah.
everyone kind of should be aware.
Right, we training on cyber, and whenever we get, the banks will send us a cyber thing as kind of a courtesy, and we circulate that to people. I think, the other issue that had come up is the segregation of duties on the accounting front. And, I think with my monthly oversight and the monthly oversight of Zolch, that, we have that, we don't have a person entering the deposit, not cutting the check type of thing. And I do can get concerned, and I have an article I'm going to read up on best practices for electronic transfers, because, in the old days, bill would come in, get put in the system, the voucher would come, I'd initial the voucher, go back, I did a pre-check report, you'd approve the pre-check report, and it would go out. And you'd have to sign, and you'd sign the check. Now you're just pushing a button. And so I do want to look into, what are some of the best practices that relate to that? Because now we're doing the same thing up to the pre-check report. I approve the pre-check report, and Kat does either, I think we're doing 6 checks a month now instead of, and we're doing ACH and key bank bill pay. So, in that step, you're losing the benefit of someone actually approving it and someone else probably signing the check. And you had the packet of, when you signed the check, it came with the invoice attached to it.
Right, so these are items we discussed, but they didn't rise to the level of
Yeah.
the letter.
A lot of checks and balances that are no longer.
Right, yeah.
Because of his in particular, because Mike calls me up and says this.
WTF.
He knows every single line on the trial balance, so we don't have that as a finding necessarily, but it is something to be, as an organization, to make sure you have a proper segregation of duties.
Are there written recommendations from the IT review beyond just these 4 high-level ones?
Those are the
That was
ones.
it.
And all
Pretty-
what happens, we have a checklist, and they call your IT person and go through that, and they come up with recommendations, but we're not doing any IT audit or anything.
Understood. And do we have cyber coverage?
Yes.
So, okay.
So,
So, yeah, give you a size of organization.
I mean, we're at risk.
Yeah.
And someone, when you get down to the lower level of people that are causing the risk, they would come after someone like us. Someone, the larger global types are going to go to you or to you.
Yeah, well,
And, but I guess, if you can think about it for our next meeting, talk about, and get your advice on going to the cloud.
Yeah.
Yep.
Okay, good. Well, I think that's.
I do want to thank
everything.
Matt and Nicole and their team. We had a great group of young people. We had Kenny and Sean. Yeah, and they did a great job. They asked lots of questions. They asked for us to provide written procedures as to how we do loans, how we pay bills, how we process payroll. And it was fun to work with them as they advanced through their career process. And, I think that equally, Matt and Nicole are always available to me, and as they do indicate, I do call them.
Yes, which is good.
You're like, do I answer?
I better answer right now, or he's gonna call again. But they didn't quite understand it when I first got here, but now we have.
Yeah, that works good. So-
Dave or Rick, do you guys have any other questions for them? Just overall, you're good?
Good.
Excellent. Thank you very much.
Yeah.
Thank you.
Thank you.
Thank you very much. Real quick, we do have.
So, yeah,
Oh,
let's
yeah,
approve,
oh,
yeah.
I'm sorry.
So if there's no other questions, can I get a motion to accept the audit report?
So moved.
Second.
Okay, all in favor?
Aye.
Any opposed? Okay, so now we can move on to the president's report
Yeah.
and, okay.
Okay, we might.
You guys
we
are
might
saying,
need to-
or you're
yeah,
good?
no,
Okay, well,
it's
thank you so
something.
much.
Thank you very
Depends
much.
how, it was a fixed fee, so you better get out of here.
We'll revisit that. in a little bit.
Thank you both very much.
Thank you.
Okay, thank you.
Okay, let's go to the
Thank you.
presentation.
You did give me $5,000 approval at one point, but we are going to get a new copier. And Steve Vandenberg helped me with the bids. It was fascinating. We had two bids. The one was $20 more a month on the copier, but 2 cents less on the, or 5 cents less on the color. 2 cents less on the color copiers, on the color copies. So when you balanced it out, we stayed with the company we had because they were basically even. He was a little bit less. The last minute, he threw in a $200 credit. But you just see how competitive that business is, and it's really a commodity. But we have been satisfied with their service. What we looked at was, now that you're looking at these leases where you have to gross them up as an asset, it does put it over $5,000. It's $240 a month. And it's about $150 a month where we go over the copies. So it comes out to about $400 a month. But on 30, we did a 48 month.
Correct, 48 months.
So we would need a recommendation to the full board to approve an expenditure in excess of $5,000.
Make a motion.
All in favor?
Very quickly on the financial report that's on the top of the, it's in a separate packet. We don't have the P&L because we have to make the adjustments. And I wanted to wait till we got them all. And I don't minimize those adjustments, but I think there's a rational explanation, if not a reasonable explanation for each of them.
I should mention, I made a comment to them in their communication letter to remove some of the smaller adjustments. There's no need for them. They're not material.
Yeah.
Because
Yeah.
there's no need for them. So
Well,
they'll probably still be free listed, but
And
something to look for when the final report is published.
And I never got more than 85% on the test, so. And I do think these new items are what,
Brian's getting 100.
yeah. Well, I did extra work, so I got the 100, but. It did make me sit in the front of the room after they realized I wasn't a productive student in the last row. We're doing really well on our budget. Kat did a great job working through this year, putting budget expenses in the month in which they occur, as opposed to just dividing by 12 in certain cases. We are up. We will be starting to go up on bank interest. Our administrative revenue is up because we did collect a fee from an HI Hudson Development IDA project that we thought we were going to get in December, but we got it in January, so it was in last year's budget. We're just on budget with respect to our county funding. We're $2,000 below on broadband, but that's part of an invoicing timing issue. Our grant income, which is the grant that's really a loan that for the Angelo fruit warehouse is on schedule and paying. Our loan interest is up $700 over 2 months monthly. So we're going to be about $82,000, and if we keep that pace, but with the loans in the pipeline, we're going to exceed the annual budget. Membership, we're going to bring money over from last year with this audit adjustment. So that will we'll get closer to where we should be on membership. We are sending out the sponsorship requests for the annual meeting today. We're 5 weeks from today is the meeting. I can't believe we're only $15 off on our budget for technical assistance, Martha. Great job, or great budgeting. So we're $10,000 up on income. On our expenses, we're down. We're below budget on just about every area. With the with the exception of our micro business enterprise, we're $1,100 over. But that's where we're providing services to businesses, and it's a program where I like to see us at budget or over budget. We're under budget on total. We did get the office supplies right this time. Last year, they were way out of line. We did not budgeted properly. And we're under on professional fees simply because they are lax in billing us. And when we look at jump up to total payroll, we're down about $3,000 a month. But we had budgeted for an intern, and we had budgeted for another part-time person that we haven't filled. So we're $14,000 to the good. I always like to look at the comparison to last year. And, in that category, we're up on revenue $27,000 because of the county monies. And the area that we're up on payroll significantly, but we were down 3 people last January, in early of last year, and we added people in October and September. If you take the total payroll and multiply it by 6, since this is for 2 months, we're right on budget on the overall salary and benefit sheet. And we are doing more with the micro business, but last year we got a significant increase. We went from $180,000 to $230,000, so we have more money to spend. And we are our total expenses are up by $42,000, and our total income is up by 10, but it's all within the budgets. So in 2 months doesn't make a year, but a lot of the stuff we have here is when salary and benefits are 60-70% of your expense. It's really how much you spend on the micro business technical assistance, and how much you're spending on new initiatives, and how you're controlling the general office expense.
Are you looking to add any new employees this year?
We do have a budget for an intern. Jessica, could you just give an update? Because before you came to the meeting yesterday, I did tell them we were going to pay for that person, that they didn't have to take it out of their budget.
I also said that.
Yeah.
But they were like, no.
Yeah, well, the
And I was
supervisors,
figuring it out.
the supervisors like that we were going to.
Yeah, so the county has a program, a summer, in the program that they run every year. And so we're participating in that. We gave some duties and job descriptions of what we were looking for, and they'll hopefully align us. So basically, like a student will come through, apply to the county, and then kind of match up based on other departments within the county. Because they said we are eligible, we can go through that. I think they were extremely excited because they haven't had much interest in the agencies, in the departments in the county taking advantage of it. So they're excited to be able to have us participate and have another place where they can send a student.
And there were really,
Yeah, age 18 and up.
there were really 2 purposes in doing it. One, the county cut back on the number of seats because they are allocating funds to a construction program through Questar. And so they had 22 seats for
Yeah.
interns. Now they're down to 15. So, because of the county being one of our principal sponsors, I thought it would be judicious to offer to participate in it, and they're very excited about it.
It's great. They pay the students $17 an hour. So,
And, we also in the past have gotten interns from Columbia Green Community College, and we will have enough to continue to do that. Jessica and Chris and I spoke about the use of interns, and we really need to have the projects so they're not just sitting here.
Yeah.
Like runners, you know, off the floor of the House of Representatives, like pages, do this today, do this, do this, do this. They really need to, and
Have projects.
has projects. And so, you know, we are looking at that, but, you know, we had a intern who was here for 2.5 to 3 years, who came to us from the college. And she went on to work at Bank of Greene County and then on to work at an accounting firm. So encouraged by the experience people get here.
So I guess we gotta go into the investment report. Yep.
It just outlines our fees and first we attach our policy to it and then we attach the audit. So you can only do the audit.
Okay.
You see what other things I can put on there. And that's the report. Okay. With that, you can attach it to the Harris report.
Do you have any comments on that?
Yeah, I mean, we don't really have any investments in the context of investments.
It's just bank.
It's all
Okay.
banking. But, you know, if we do move towards, one of the solutions that people are suggesting is that you do have, you have brokerage accounts to spread some of the risk. And so, you know, if we were to look at that at the time we got your approval to do that, we'd modify the policy.
You guys have any questions on that?
Just on section 5 of the policy, it speaks to not exceeding FDIC limits in any one institution. Should you consider softening that a little bit? given that-
Attempt not to.
I realize I
Best-
probably have to go back through the
Yeah.
review and approval process. It's just in light of everything that's being talked about.
Yeah.
Something
We
like
can just modify that. That's,
Or if you guys, anything else before we approve it? No questions? Okay. Can I get a motion to approve the investment report?
So moved.
All in favor?
Aye.
Any opposed? All right, carried. So the committee evaluation. 2002 committee, is that you, Lisa?
Yeah,
Go over that, okay.
Yeah.
You need tabs.
What page is that on, Lisa?
I'm looking there, right? I did this one a couple months ago. There it is.
Oh.
It's on the back side of the policy. So this is, you guys all filled out your evaluations and this is the result. Doesn't go anywhere, it's just internal. You just have to do it. I can go through it if you'd like.
I think it's self-explanatory unless you guys need clarity on it. Pretty good. All right, so if there's no comments,
So moved.
questions, second, all in favor?
Aye.
Any opposed? No. Approved. The draft audit and finance committee charter.
those charters have not significantly changed. Sarah Sterling, our secretary of the board and chief ethics officer, pointed out that over time, we were taking the charters from the authority budget office and recrafting them. They were the recommended policies, but that there was no consistency in how they were presented in terms of format or context. So Sarah met with Andy Howard and they reviewed all the charters. And now when you read them, you think that they were all prepared for the same organization and entity, but none of the specific duties or tasks have changed.
And with Jessica, with the workforce and finance committee, are we phasing that out? I wasn't sure on the last meeting. Are we
No, I think,
Just-
sorry.
just totally modify the direction?
Yeah, it still
Okay.
is a pillar within the strategic goals. It just is a change in sort of the actions that we do. It's more of a supportive role. And I think that's what we focus on going forward, is making sure that we have involvement enough to be supportive to whether businesses, an agency, whatever it may be. But we're not driving certain things. We're not taking ownership.
But it will still be a committee and it will still be, okay.
Yeah.
That's my
Probably meet
only-
quarterly, not
Okay.
every other
That was
month.
my only real question. Okay.
Quarterly, just kind of evaluate.
Oh, this is, go ahead.
Nope, you go.
This is a sheet I put together when I first started in 2015. And, it does give you a perspective on, we've been pretty consistent and pretty level. And, we have grown because of the loan program, our total assets, and because of, and we're pretty consistent. I will have, I'm researching, in 2015, we wrote off a lot of loans. And I'm going to research for you why we had a negative in 2020. I think 160 of that was PPP 1 and 2 that hadn't been forgiven, or had been forgiven, right? It was forgiven in that year. But I will get that for you, because that jumped out at me, the negative 277. I know we did 1 year, when we know we're gonna have a loss, we put an extra 50 or 100,000 in the allowance for loan loss. And so, but if you look on a 9-year average, we've made $12,000. I think it's just good to keep in perspective. I'll probably, not show 9 years going forward. I'll probably show 5, but
Okay.
I just wanted to see where I was on my tenure.
All right, so do you want to approve the audit and finance committee charter first, or?
Oh, I'm
is
sorry.
that- Yeah, okay,
So
all
moved.
right, yeah. Second? All right, all in favor?
Aye.
All right, carried.
Mike, I find these been extremely helpful in education.
Hopefully blown up like that.
You know, I can read it. So no, anytime I like last year, the year before
Yeah.
that, so it's like,
And we're working on, doing that on the functional expenses, just to, because you see creep, and, I've always budgeted $750 per person for office supplies. It just somehow works. But what kills you is the computer costs.
Yeah.
Because you're in a situation where the equipment's 3 to 5 years, and so you're really expensing it.
Mhm.
And we're paying over $1,200 a month to the third party to have help desks and call when there's a crisis and call when the motherboard goes. And, it's a big expense for small businesses, bigger for big businesses. Doesn't go away.
I guess we have no other business. Anyone else? Any of you guys? Are we good? All right, and there's no public, so can I have a motion to close the meeting?
I move we close the meeting.
Second, all in favor?
Aye.
Thank you all very much.
Thank you, guys.
Thank you, Mike.
And I'll cut, if you can get me those documents on the bond deal, I can get that straightened out for you.